Do you need access to cash? Well, in this video, we are going to share with you the step-by-step formula we use to access cash from whole life insurance. That's right, we said it. My name is Carmen.
And I'm Darius. And in this video, we're going to discuss how we use whole life insurance to invest for the next generation. But before we get into it, make sure you hit the notification bell and that subscribe button so you can be notified when we post new videos. Now, the past 10 years, Carmen and I, we've been on a financial journey where we try to surround ourselves with high net worth people because obviously they know something about money that we didn't. And one of the things, or the most important thing that I really learned, is that wealthy people don't use their own money to invest.
And wealthy people use life insurance differently.
Exactly.
Because if you're new to the channel, you'll know throughout our story that Darius and I just thought life insurance was something that you put on the shelf and the next person, your spouse, is supposed to crack open what do you call it? The vault, essentially, for needing it for burial expenses, for example. And so in this video, we really want to enlighten those who aren't familiar with whole life insurance about the perks that are available to you and how you can actually use life insurance today while you're living, as opposed to waiting and thinking about putting it on the shelf or waiting for somebody to crack that vault when you die.
Right. Now, hence is why Carmen and I was in this room with this group of high net worth people. We're in a room with business owners. We're in a room with bank owners, literally own banks. Doctors, attorneys, inventors, real estate investors. There was a large group of people in this room that were sitting there trying to understand how they can leverage this product for while they're living. Now, this is a different way of kind of going about this life insurance thing in the first place. And the very first thing that I realized, or the most important thing that I realized, is they weren't complaining about the cost of the product. Granted, okay, yeah, let's say they had money. But the most important thing they had is free cash flow. Now, what is free cash flow? It's after they've paid all their bills, they've had discretionary income. And what they wanted to do with this discretionary income is keep it and use somebody else's money. So that's the very first thing that we want to understand, and why they decided to leverage this product of life insurance is so they can get access to that cash.
Yeah, and I think we need to go back to the point of free cash flow, whereas like the consumer mind versus the investor mind. When we think about free cash flow or discretionary income, typically we're like, ooh, what can we get with this discretionary income? I need some shoes, I need one of these and one of those, 3 of these. Whereas when you think about an investor standpoint, they're going, okay, this is free cash that's available for me to make money with. And that's the difference. And that's how the separation kind of happens between, I don't even want to say the haves and the have-nots.
I wouldn't say kinda. That's exactly how it happens. They prioritize making money over spending it on debt. Prioritize saving over spending money on debt.
And like I was saying, I don't necessarily want to call it the haves and the have-nots, but you can totally see the illustration that I'm painting for you all, as far as like when Jimmy has money and Susie has money, and how they both can operate completely differently and still have the same paycheck coming in. So that's why today it's really about just, again, understanding, one, how to utilize your money to your advantage, and then two, understanding, what products are out there and how you can use it, again, to your advantage.
Right. So if you trying to figure out, or if you're saying that whole life insurance is very expensive, it's maybe because you are prioritizing, maybe because you're prioritizing other things like debt instead of prioritizing saving your money, because the byproduct of saving money is more money. Yeah.
And are also to maybe uninformed. Because I know, again, for us as the consumer, all we were taught was whole life is expensive. Whole life is expensive. And then it wasn't until we dove into whole life where we were like, oh, this is a completely different product than a lot of those that are out there, which makes sense why it might be more expensive than others.
Right. Makes sense.
Now, the second point we want to address is having access to cash value. What does this mean? So inside of a whole life insurance policy, when you pay your premium or the cost for insurance, as long as it is designed to have cash value growth in the very first year, this means you will have access to liquid capital inside your policy that you can use at your discretion. Why is this so huge? Because you can't do this with a lot of life insurance products. So the idea behind this is there is a guaranteed growth on this cash that's going to grow year after year. And additionally, you can access this money in the form of a loan, and you don't have to pay any penalties on it the same way that you would do a retirement account, for example. Now, knowing this information, again, it's important for you to continue to do your research and study study and understand, again, how this product works. But the point that we're talking about is now that this educated individual is going to use their free cash flow differently or more strategically, they may buy a whole life insurance policy. One, because they're going to have two things. They're going to have access to cash that's going to grow at a compounded rate, and they will be able to provide their family with a death benefit should something happen to them. And why is this already leveling up? Is because if you keep that money, let's say in a savings account, all you have is access to cash. And should you pass, there's not going to be any death benefit that you're going to be able to leave your family if you don't have life insurance. It's just going to be whatever's available in that bank account. So that's why we have to start thinking about things a little bit differently and using our dollars more wisely.
Right. And as we talk about money that's sitting in our bank account, a lot of people have commented saying that, why don't you just use the money to invest?
Yeah.
The thing is, the point that we made earlier is that wealthy people don't use their money to invest. Mm-hmm. They keep their money and then they leverage their funds to get a loan from somebody else. Mm-hmm. And that's exactly what happens with the cash value is you're able to leverage your life insurance policy to get a loan from the insurance company. Mm-hmm. Now, what this allows you to do is even though you have accessed those funds through a loan and deployed those funds, you still earn interest.
Absolutely.
When you use the money that's sitting in your bank account, you access those funds and your money is used. Mm-hmm. You're no longer earning interest. So that's the key difference that we want everybody to understand is that even though you have an outstanding loan, you can continue to still earn interest as if the funds are still there. Reason being because you're getting a loan from the insurance company. Mm-hmm. You're not touching your life insurance policy. You're only using it as leverage. You're using your cash as leverage.
Yeah. Now, I think it is important to address too, because we get the questions often, like Darius said, why don't you just invest? Why don't you do this? Why don't you do that? There are options that you all have, right? It's like having a tray full of food. You may want vegetables today. You may want meat the next day. The idea is just understanding when you have money, you are probably going to use your money in different ways. And one way you may invest in the stock market. And the next way you may decide, you know what, I want to put my money inside a whole life insurance policy. Mm-hmm. So no way, shape or form are we saying this is the end all be all financial solution. We are saying this is one of the tools that you should have in your toolbox when it comes to you trying to generate wealth. Now, this is where things really get juicy because we have the understanding of how to use your free cash flow. Next, we have the understanding of being able to utilize the cash value inside a whole life insurance policy to invest. Now we're talking about using that cash to make passive income. So what are the strategies that you want to get involved in? Are you going to invest in real estate? Are you going to have exposure to the market? Are you going to invest in bonds? What are you going to do to be able to get more money, principal and interest, back to your own system? Because the idea is you're going to continue to do this day after day, year after year, so that you can grow as much capital as possible. Because what we ultimately want is for you to understand how your money machine works so that you can teach it to the next generation and they can keep it going. Right. We're going to talk about that more in this video.
Right. Now, for us personally, one of the things that we want to invest our cash value in is real estate. Yeah. Reason being is because that money comes back, principal and interest. And now remember, we're getting a loan from our life insurance policy, so we're going to be charged interest. We're going to have our real estate pay us back principal and interest, and it's going to take care of that interest, and we're going to be able to take the difference to put back into our system. Mm-hmm. Now, why is this important? It's because we don't have to do it. Our investment is making money for us so that it can continue to feed the system. Mm-hmm. Initially, when we started feeding the system, we were using free cash flow. Now we've transitioned that responsibility over to our passive income asset that we're using to generate principal and interest. Mm-hmm. Now, this is key because in step number 4, now we need to teach our family and beneficiary how to do the exact same thing because that's what creating a legacy is all about. It's not about leaving them a death benefit or a nest egg so that they can do whatever with it, spend it. Mm-hmm. It's so that they can use it to buy more assets.
Mm-hmm. Now, if this is a value to you and you're thinking that this is something that you want to do, definitely click on the link below because we are life insurance agents and ourselves or a member of our team would love to work with you and figure out how we can help solve your specific financial needs.
Now, when it comes to how we're going to teach the next generation or how we're going to teach our daughter how to do this, whenever I go and make a real estate purchase or a real estate transaction, I'm not just looking at it because I want to make money. I'm also taking notes on how I can incorporate teaching our daughter how to do this in our day-to-day life. How can I start instilling some of these principles as to, okay, I look at the land, I look at the comps, I look at the property. How can I start just giving her little breadcrumbs on how she can start working in the family business or start using the language around her so that it'd be easier for me to teach her how to do this, because it's going to be her responsibility to continue this whenever Carmen or myself isn't here to do it for.
Mm-hmm. So then moving on to the next point, what we want to address is when you pass away. The idea is for your family to understand this whole process because you're instilling it in them. And when you pass, when they receive the death benefit, we believe that the idea is for them to get more life insurance so that you can continue the cycle over and over again and continue to use the cash value from the policy to invest and to continue to pass on the death benefit from generation to generation, because you want more and more capital to be able to work with. And at the end of the day, you also want more and more death benefit to cover your family's needs.
Right. Because at the end of the day, whenever you get a loan or whenever you access your cash value through a loan, you're going to be charged interest. And in order for you to pay that interest, you don't want to pay for it yourself. You want your investment to take care of it and take that difference and put it back into the family system so you can buy more assets. That's the whole point of creating a legacy, or that's the only way you can create a legacy, is for it to operate when you're not there, or operate when you're no longer there. And you have to be able to teach your beneficiary, your family, how to do this, the intricacies of the things that you want to invest in. And the thing that you invest in now may not be the thing that your family invests in 50 years from now. It all depends, but you have to really teach them the idea of how to move money using this system. Absolutely. And when we talk about whole life insurance, it's not just the death benefit. It's not just the cash value. It's when you bring all these things together to create a system that continues to feed itself.
Now, I can see people in the comment right now saying, hey, Darius and Carmen, actually, no, when you pass away, you don't get the cash value and the death benefit. So let's address that, because that is something that's a good one. That's a misconception that's out there. So what we hear, the gossip word on the street is people sometimes get frustrated with whole life insurance because they're like, when I pass, my family should get the cash value and the death benefit. Well, folks, just so you know, living benefits mean that the insurance company is siphoning your death benefit to you right now so you can use it. The cash value is essentially pieces of your death benefit that the insurance company has made available to you. It is not two different bank accounts. It's essentially one bank account that they're saying, okay, I'll give you a piece of your death benefit this year. I'll give you a little bit more next year. I'll give you a little bit more than that, which is why when you pass, if you have an outstanding loan, let's say you pass away and you have $1 million in death benefit, and you have an outstanding loan of $100,000, that is why the insurance company is only going to pay your beneficiaries $900,000.
Right.
Which is why I wanted to clear that up and make sure that we all understand what we're talking about here.
Right, because that's the collateral that you use. That's the leverage that you use in the first place. And if you don't pay your house note, you leverage your home, you're not going to have your home. When it comes to whole life insurance, what you did is you leverage your death benefit. So if you don't pay it back, then they're going to deduct the amount you owe from your death benefit.
Yeah. So just want to make sure we clear that up, because that's in a lot of our comments and some of our videos.
Yeah.
But I digress.
And I'm glad you brought that up, because that is very important for people to understand, which is why you're using the cash value to buy passive income. The reason why you're using your cash value to buy an asset that is income producing.
Yeah, because we want to replace that hole that you created inside your life insurance policy. Ding, ding, ding. See how it's all coming together?
Absolutely.
Now, since we're debunking some things, I want to make sure that we talk about the other products, because it's important to share this information with you. So when we think about life insurance, one very popular product is called term insurance. What term insurance is basically just death benefit, and it's going to cover you for a specific period of time. So let's call it 10, 15, 20 years, for example. You will have life insurance for that set period of time, and you will only have access to death benefit. There is no cash mechanism that grows inside this product, which is another reason why it makes it much cheaper. The other product that we hear a lot is called IULs, or Indexed Universal Life Policies, and these can look super sexy on paper because they are designed to mimic what's happening within the stock market. Now, the thing to note about these type of policies is there is no guarantees. So if you're trying to emulate what we're talking about, you want to make sure that you're able to use a policy that is going to provide guarantees, and the cash that you think is going to be available based off of your illustration is going to be available to you. So that's why we don't use either of those products to do exactly what it is that we're talking about, which is using life insurance to invest and to make more money.
Right. Now, there's nothing wrong with actually having those products, because you can have term insurance and whole life insurance at the same time. We're not saying an either or. We're just talking about specifically for for how we're trying to build a legacy for our family and the process in which we're going to do. So just to recap, we use our free cash flow to pay our policy premiums initially. And then what we get with our whole life insurance policy is access to cash value. Now, this cash value, what we do is we access it through loans, which means we leverage our death benefit, and we have to pay interest to the insurance company because we're borrowing their money. We take that money that we borrowed to buy passive income assets so that that passive income can not only pay us back principal and interest, it can take care of the interest that we owe to the insurance company so we don't have to do it. That difference we're going to put back into our system to buy more passive income. Now, at the time of us buying this passive income, we're also taking notes and we're teaching our beneficiary and our family how to do exactly what we're doing, how to do this investment in real estate. How are we going about finding these properties? How are we going about looking at the comparable properties? How are we going about making sure that we're maintaining the rentals for whenever damages and things like that come up? Because that's going to happen in investments when you invest in real estate. The last thing that we're doing is when it comes to the time of our death, we're going to use the death benefit to buy more life insurance so that our beneficiary can continue doing what we were doing with the cash value. And they're going to do the exact same thing until the time of their death, when they're going to buy more life insurance. And keep whoever their beneficiary is using the cash value to buy more passive income assets.
And going back to what I was saying before in the beginning of this video, is it's all about understanding the tools that are in your toolbox. So for us in this video, we're showing you how to use a hammer. You're not going to use a hammer to unscrew screws, right? There's going to be a specific utility that you need for this tool, and you need to understand how to use it. So if you want more hammers in your toolbox, definitely click on that link below.
And if you want to understand the difference between index universal life and whole life insurance, check out our next video.
And remember to own your own lifestyle,
or someone else will.